Hello, everybody. Thank you again for joining us. It is the best time of the year. It is March Madness, and we're here to nerd out on March Madness. And instead of looking at basketball games, we will be looking at industrial buildings to acquire today. The goal for the end of the day today is to write an LOI, which is also known as a letter of intent, on one of these industrial buildings and start the negotiation process with the seller. Let's go introduce ourselves real quick. My name is Lane Guger. I'm a development associate here at F Street. I do both developments and acquisitions. And my counterpart here is Brian Gallagher. You can introduce yourself if you'd like.
Yeah, I'm Brian. I work on the investments and investor relations team here. Unlike Lane, I went to Marquette University, and today we are your selection committee. So we're going to be going over, kind of how we find some of these industrial opportunities, kind of our first layer of how we look at them, how we analyze them from a face value, and then what are our next steps moving forward? Because our investors, you guys see, a lower amount of overall opportunities, but what Lane and I are doing on a day-to-day, week-to-week basis is, we're looking at, dozens of opportunities a week. And in this week, we're looking at 16 opportunities, a sweet 16 of opportunities, and we're going to kind of boil them down to, one LOI to send out. And, what is an LOI? An LOI is a letter of intent. It is a preliminary offer on a asset or a building that says, hey, here's how much I want to pay for your building. Here's any other, rough conditions and precedents that we're going to kind of work with as we go into a further purchase and sale agreement, due diligence period, into a final closing period. It lays all that out, and it's used as a negotiating tool with potential sellers and brokers as we move through the acquisition process of these opportunities.
Awesome. Thanks, Brian. And let's talk a little bit more just on how we source these deals. So what we did today is a little bit different from what we do all the time, I would say. We have some great relationships with brokers that are able to help source these deals for us. That saves us some time. We also utilize their expertise to be able to find great deals. Peter's going to come in and just help us out a little bit with the board there. Thank you, Peter.
Perfect.
Today we used Crexy, which is a great website for sourcing deals. We can go on there and use a bunch of filters to find exactly what we're looking for. So our filters that we use today were buildings built before 2010. We're not looking to buy the new Class A 40-foot clear buildings. Those are fine. They usually trade at low cap rates, which means high price. We also are looking for anything more than 75,000 square feet. Anything less than that, it's hard to really get a good return on investment that's substantial for our investors. And we're also looking at purely Class B buildings. So with that being said, let's take a look at our bracket. So here is the bracket. We have 4 regions. Region 1, we have vacant buildings. Region 2, we have value add. Region 3 over here, sale leaseback. And region 4, we have stabilized. We'll go into what that means exactly when we go to each region. But let's start out with our vacant buildings. Here we go. All right. So in our first matchup of the Sweet 16 here, thank you, Brian. In our first matchup with Sweet 16, we have Alexander City, Alabama versus Mebane, North Carolina. I apologize if I'm not pronouncing that correctly. I don't know. It might be Mebane or Meban. Regardless, Alexander City, Alabama. Let's take a look. So 155,000 square foot building. It's completely vacant. Built in 1990, they're asking for $4,400,000 for the building, which is $28.38 a square foot. This is actually, fun fact, a former Fruit of the Loom plant. So great that it's had a good tenant in there before, bad that it doesn't have a tenant currently. However, it's got a good clear height, 24 feet, just meaning the minimum operable height that you have within the building. For racking, whatever that might be. And then it has 10 loading docks indoors, which is good for a building of that size. So we like that one. Let's move on to Mebane. Look at its opponent real quick. $6.2 million a square for his asking price, which is $63 a square foot. Much higher than what we're looking at here in Alexander. 21-foot clear height, 8 dock doors. As you can tell, here's a picture of it. So it's a pitched roof. I think part of the high asking price is that we've got this big yard here, potentially able to develop there, create another building on the property, but that's not really what we're looking for in North Carolina. We're not going to develop in North Carolina. So I think out of these two, what we like more, we like this square building here. That's a really nice frame. It's got a good looking parking lot. Maybe the roof needs some repairs, so maybe we factor that into our offering price. But we're going to go with Alexander City, Alabama in the first round here. Let's take a closer look. We got Kendallville, Indiana versus Deep River, Connecticut. So Kendallville, Indiana, looking for $47 a square foot, and Deep River, Connecticut, significantly less at 22. And you can see why. It looks like Deep River, Connecticut, built in 1914. That is quite an old building compared to 1988 in Kendallville, Indiana. A little bit higher clear height on Kendallville. You see it's 17 to 27. That's because these buildings are pretty broken up here. Looks like one was probably added on the west side quite a bit later than the initial building on the east. And then if you're looking at Deep River, Connecticut, I mean, there's a lot going on here. It looks like we have some industrial space down here, some office here, maybe 4 stories of office. It's got 7 dock doors, which is great.
And it's very common for a lot of these assets to have some office in them. If it's a 100,000 square foot warehouse, generally you'll see between maybe 2,500 and even up to 10,000 square feet of office.
Yeah.
For us, less office is better. There's a lot of maintenance that goes into the office area, a lot of touch up that you have to do each turn of a tenant. So less office is better. We are focused on industrial assets.
Yes, we're not looking for office. So I'm sure there's a buyer for that property. That buyer is not us, unfortunately. So we're going to go with Kendallville out of this matchup. We got 2 good buildings left, both trading for reasonable price per square foot, both built around the same time. And the clear height, Alexander City edges out Kendallville just by a little bit there, as long as with dock doors as well. So I think in the end here, I'm going to go ahead and send Alexander City on to the final 4 out of the vacant region. All right, Brian, you are up. Why don't you go over the value add region for us? Here's another breakdown of our bracket here. Alexander City moving on.
Yeah, let's do it. All right, so value add. So the previous 4 that we looked at were all fully vacant buildings. Now, one of these buildings is fully vacant, but it's a little bit different of a play. We consider these all value add to some extent. Now, what is a value add? Value add simply means that either through physical repairs to the asset and the property and or optimizing the lease structure and the rent roll over the next, say, 5 to 10 years, we are creating value in the building and in the asset. And with a lot of these industrial assets, one good lease can really change the value. So that's really what we're looking for with these value adds. Which of these assets has the highest probability of getting that good long-term lease once it's through? So like with Amarillo, Texas here, it's a short-term sale leaseback for 1 to 2 years. 1 to 2 years doesn't do a whole lot for a lender that's going to lend you money, and then also for investors. You can't really count on cash flows for 1 to 2 years. So we're looking for longer-term leases once the 1 to 2 years is up. So our first matchup here, we got Omaha, Nebraska versus St. Paul, Minnesota. So Omaha, Nebraska, $46 a square foot versus St. Paul is $97 a square foot. Now, this asset where it's located in St. Paul, it's right across the river from downtown. So it's a great kind of last mile distribution center location, maybe for, a small locally owned company that's, might have a few stores and needs to get product to those stores and needs a centralized warehouse. But $97 a square foot is a very high basis for what we're looking for. So, let's just, pause on that for a second. They're both old buildings. So 1964 versus 1965. Clear heights between 10 and 20 feet in Omaha, Nebraska, and between 14 and a half and 16 in St. Paul. So, with these industrial assets, the higher the clear height, the better. The higher you can stack the product, the more rent you can, charge these tenants. As I mentioned, St. Paul, Minnesota is fully vacant. Omaha, Nebraska has a lease through the end of 2026 to a electrical power repair company. So, what we would do with an Omaha, Nebraska, we might buy the building. We know that we're going to have that rental income for the next, call it 16 to 18 months. And there's a few different strategies that we can do. We can impound all of their rental, all of our rental income. We can impound it. And then when they vacate the property, we can use that income to essentially pay for, the next tenant's move-in costs, which is what we call a tenant improvement allowance. So looking at these two head to head, I'm actually from St. Paul. I love St. Paul, but I think I have to go with Omaha, Nebraska here.
See you later, St. Paul.
And our next matchup, we have Decatur, Illinois versus Amarillo, Texas. You know what they say, life is greater in Decatur. Decatur is a really great manufacturing town. There's a lot of manufacturing there in central Illinois. We'd be getting into that market at a really good basis at $36.61 a square foot. It's an older building. I guess all of these are older buildings. It is what we're looking for. And then what I really want to focus on here is the 30.5-foot clear height. Of this quadrant, of this set of buildings, it's the highest clear height we have. It's a pretty standard distribution center. There is a small office component in it. And then we also have a lease through the end of 2025. So, not quite as long of a lease as, say, the Omaha, Nebraska, where we're going to be able to impound 16 to 18 months of rent. Here we are only going to be able to impound, by the time we would close on it, between maybe 4 and 8 months of rent. So I really like this one. And Amarillo, Texas, it's a little bit further away for us. We don't understand this market as much either. With Decatur, it's just in our neighboring state. We understand the Decatur market. It's close by for any asset management needs we have. I'm going to have Decatur, Illinois, moving on over Amarillo, Texas. And then between Omaha, Nebraska, and Decatur, Illinois, we have two really good options here. We have two winners from the first round. They're both leased on a short-term basis. So, that's that value add that we're going in with. Because it's a short-term lease, we're buying the building for a lower value with essentially the bet that, hey, we're going to find a new tenant for these spaces and move on. So I'm going to have Decatur, Illinois going on to the Final Four.
All right. Life is greater.
In Decatur.
There we go. Another quick snapshot of our bracket. Move through here. Onto the sale leaseback region. We'll move through this very quickly. The sale leaseback is just like it sounds like. The owner of the building is also likely the operator. They will sell you the building and in exchange execute on a lease. So you're looking at what your cap rate is. You're looking at the building, the term of the lease, et cetera, are the most important factors. So starting Roulette, Pennsylvania here, we got a nice looking building. We got 35 to 39 foot clear, built in 99. That's a pretty new building for Class B. Tenancy is Day Ross, and which that is a subsidiary of McCain Foods. Interesting fun fact about McCain Foods, Brian, largest manufacturer of frozen potato products.
Really?
Really, yes. So I like this large company in McCain Foods. Good looking deal. $525 a square foot that they're going to be paying on this. You're going to be charged $65 a foot for buying the building, and it's a 3-year absolute net. Real quick, absolute net means the tenant pays for everything. They pay all the expenses. If something happens to the roof, tenant's paying it. Triple net, same deal, but the landlord is likely paying for structural, roof, parking lot repairs, etc. So 3 years absolute net, tenant's paying for everything. 3 years is very short though. Let's look at Cleveland, Ohio. Much older looking building here. It's only 3 years older. That means maybe not the best maintenance over time. Clear height, 16 feet, quite a bit shorter. SRC Worldwide is a tenant. They actually produce road salt, $6 a square foot, 15-year absolute net. Better terms on the lease. However, it doesn't have the credit tenant necessarily that Roulette, Pennsylvania does. I think we're going to go with Roulette, Pennsylvania in this first round. Real quick look at Dayton, Ohio versus Archbold, Ohio. Both in Ohio. Not sure if that's a real estate or not yet. Dayton, Ohio is trading at $37 a square foot compared to $45 in Archbold. Dayton's significantly older, built in 1947. However, a lot of maintenance, new roof, new sprinkler system put in 2019. Archbold, Ohio, built in 99. Clear height, much bigger difference between Dayton and Archbold. That's a big selling point for me. Dayton, Ohio, 3PL currently controls the building. They're willing to lease back at $350 a square foot. Meanwhile, in Archbold, Ohio, it's a partial sale leaseback. Brian, can you remind me, is that 40% of the building that they're willing to take?
Yeah, so the current seller and occupant of the building, they're willing to take between 30 and 45% of the building upon sale. Yep. Now, Archbold, Ohio, it's a very large building. It's about 1.4 million square feet. So 30 to 45% of the building is great, but it still leaves, call it 800,000 square feet of vacancy that we have to go in and backfill.
Yep, exactly. So after comparing these two, I like I like the Dayton, Ohio asset a little bit more, and I don't remember if that's one we picked beforehand.
Yeah, I think it is. And,
all
we're
right,
going
good.
in at that lower basis. When it comes down to it, dollars really speak. So the lower the basis you can go into these assets with, the better off you'll be throughout the life of the investment.
And when we're looking at sale leasebacks, we're looking at a bit of safer investments. We like that the 3PL is going to be taking the whole building. But out of these two, I have to say I like the large building in Roulette, Pennsylvania. I like that it's 40-foot clear. I like the tenant here. I think this is going to be moving on to the final four. All right, and we'll do another quick snapshot of the bracket here. We got Roulette moving on. We already have Alexander City, Alabama, and Decatur, Illinois in the final four. We'll keep pressing on to our last region of stabilized assets. And we'll move quick here. We know the games are just about to get started here. So take it away, Brian.
Yeah, so stabilized assets. So these are going to be fully occupied buildings or mostly occupied buildings. It's more of just a predictable cash flow play rather than trying to, derive that value where you're going to have, this really big upside. So a little less risk, a little less reward, still a great investment. So let's take a look. Let's dive in. So we have Bremen, Indiana versus Tulsa, Oklahoma. We're getting in at really good bases in both assets, 41 a square foot, 56 a square foot. And to kind of frame these bases, the replacement cost of these buildings, if you were to build the same exact building today, would be between 90 and 100 to even up to $110 a square foot. So if we're between 40 and 60% of that, that's great for us. Both buildings are fully occupied. And now I want to touch on cap rate. So cap rate, otherwise known as capitalization rate, is how you value these buildings when you're purchasing them. And so if we were to buy one of these buildings with all cash, our first year return in Bremen would be 6.5%, and in Tulsa it would be 8.91%.
Our net operating income, right?
Based on our net operating income. But when you layer in debt and some other expenses, it's not an exact measure, but it's still a really good tool to value these buildings. Now let's look at rental rates. 504 in Tulsa, but what I really want to focus on is 268 in Bremen, Indiana. This is a below market rent. This is what we love to find. So below market rent, we can still buy it stabilized, but there is some upside down the road with bringing that from 268 a square foot up to where the market is, which is closer to $3.75 to $4 a square foot. We also really like the tenant in here, Patrick Industries, publicly traded company. They have several business lines. At this specific facility, they're doing wire stretching for recreational vehicles and their marine business. So we're gonna have Bremen moving on in the first round here.
I also want to point out here, this looks messy to me, right?
This does look very messy.
This looks like add-ons. This doesn't look as clean of a building as we have. I know we don't have an exterior picture, but as clean of a building as we have in Bremen, Indiana. Outside of this, what's driving this cap rate to be lower than this, meaning more value, is Patrick Industries. Anytime you have a publicly traded company, anytime you have a super high credit tenant, it's going to be traded at a lower cap rate. Less NOI, still higher value, just because you have that surety that you're likely going to be collecting on those rent payments, and not necessarily saying anything about the other tenant here, but it's just less likely with a small company that you will be collecting on those rent payments. That's what drives that cap rate down and prices up.
Absolutely. So let's move on to Maumelle, Arkansas, and San Angelo, Texas. Again, very similar basis, 56 a square foot, 53 a square foot. Occupancy is 100 in both. So our first two kind of categories of what we're looking at, very comparable. Even the rents, 332 a square foot versus 390. They're very similar. Obviously, 390 is going to be higher. You're going to have a little bit more NOI. And you're getting that building for a little bit cheaper. So if you're buying the building for less, but you're getting a little bit more in rent, that's a good equation. That's a good sign, when you're looking at these ones head to head. Another thing I want to touch on is the tenants in these. We have Principal LED, a lighting business. They've been in business for 150 plus years. I'm going to assume they weren't doing LED lights 150 years ago, but they were lighting back then and they're still lighting today.
One interesting thing I was reading about this business too is they rely heavily on skilled workers, and there's a high concentration of skilled workers here.
Which is fantastic. Now, Vital Records Control, they do document scanning, processing, storage, and then they transform, physical documents into digital ones. So it's still a great business, a lot of physical documents out there in the world. But if I'm looking at these companies head to head, you know what? We need a lot more lighting. We need a lot more LEDs. They're energy efficient. They're great. We put them into a lot of these assets when we purchase them. So I'm going to have San Angelo, Texas moving on. Now, when we're looking at these two head to head, Bremen, Indiana and San Angelo, Texas, I like Bremen, Indiana. There's a little bit more mark to market rental opportunity down the road just because this rental rate is so low. And then, again, putting the tenants head to head. We have a lighting business that's been in business for a long time. I'm sure they're going to keep doing great and keep paying rent. But we also have a publicly traded company. So I'm going to go with Bremen, Indiana, Patrick Industries, under market rents, 100% occupied, moving on to the final four.
Let's do it. Awesome. Thank you, Brian. Final four. We have Roulette, Pennsylvania versus Bremen, Indiana. And we have Alexander, Alabama versus Decatur, Illinois. I think we're just going to talk about it right now here, right? Actually, you know what? Is there?
Yeah. Perfect.
Perfect. Oh, look at that. All right, good deal. So real quick, what's really important now is location, right? We've talked about the building's characteristics, a little bit about the tenant's characteristics. We'll go through this quick, but yeah, if you could exit the presentation up there, please. We have some maps pulled up of where our tenants are. So let's take a quick look. Roulette, Pennsylvania. Nice looking building, as we've talked about. High clear height. It's got a good footprint. Great tenant that's in there. But as we zoom out, I'm not seeing much else, Brian. What are you seeing?
Yeah, I'm seeing a lot of foothills. I'm seeing a lot of trees. It does look like it's on kind of, the main road, the Grand Army of the Republic Highway, but it doesn't look like there's a whole lot else out there.
That's right. But if you're looking, thank you. But if you're looking, so here's our building. Gonna be able to, there we go. Here's our building. And this is Roulette. There's not much going on in Roulette. It's a little scary. If the tenant moves out of here, they're only willing to sign a 3-year absolute net lease. That's a little scary for me. Let's look at Decatur secondly.
We already have a lot more going on here in Decatur.
Quite a bit more. There's a lot going on. How do I clear these circles? There we go. Here's our building. A lot going on in Decatur. We like this property quite a bit. Good industrial presence already. No concerns really about Decatur. It's off a main highway, it looks like. Let's take a quick look at Alexander City, Alabama. A little bit less going on here, but still not far from a main highway. US 280 runs right through it, less than a mile from that. So, Brian, I don't know about you, but that doesn't scare me too much.
No, not at all. And you have a lot of other industrial uses. And as Lane said, you're right off kind of the main road through town there.
Yep. And then finally, let's look at Bremen. Here's our property. It looks like we're sitting in another industrial park, not located too far outside of town, off of Highway 6. This is off the same highway, Brian. I hadn't realized that. That's the Grand Army of the Republic Highway as well.
And they're several states apart.
Different states, yep. Anyways, so nothing concerns me. I think the biggest concern here is probably Roulette, Pennsylvania. That's looking pretty rural for me. If the tenant exits, I don't have high confidence that we're going to be able to find a new tenant for that building. So I think we're going to cross Roulette, Pennsylvania out, send Bremen to the finals, and then we're going to send, I believe, Decatur to the finals as well. We just like the Decatur market a little bit more. Closer to us. We understand the Decatur market better, and we understand Alexander City, Alabama, and just a little bit nicer of a building here as well. So out of the two, Brian, who's our champion?
So here's the thing. This is not basketball. We don't have to crown one winner. We don't just submit one LOI. We don't just submit one offer and find, one opportunity for our investors. What we want to do is find as many great opportunities for our investors as possible. So what we're going to do when we log off of here is we are going to call up the brokers in Bremen, Indiana, and the brokers in Decatur, Illinois, and we're going to say, hey, who do I need to send my offer to? Who do I need to talk to get this LOI submitted and to start moving the process forward so we can find some more great investments for our investors?
That's exactly right. We like both of these deals quite a bit. The asking lease rate in Decatur, Illinois is over $5.80 a square foot, which is fantastic. Bremen, they're asking for a 6.5 cap. We probably will give the broker a call and say, hey, are you actually getting offers at the asking price? If they are, then maybe we'll submit. If they're not, then I think we go in closer to a 7.5, 8 cap, which would be about $5 million offer on that building. So that's kind of our process. We like to do it in a bracket style for March Madness today. This is not normally how we do it, unfortunately, even though it's a fun way to do it. And that's our whole process. I don't know if you have anything else to add, Brian, but here are our champions.
Yeah, I mean, I think we just wanted to, have some fun with March Madness, show you guys just a little bit about how we look at deals. As you can see, there's a lot of information that we get online through phone conversations with the brokerage teams. We're looking at Google Maps. We're looking at what else is on the market in the area. What are, buildings selling for? What are leases getting signed at? What is the tenant's business? Is their business going to be records, storing physical records for forever? Is their business going to be, manufacturing a wiring for vehicles. There's a lot of different tenants out there, and our job is to understand, how profitable are they? Are they growing? Are they shrinking? And what's going to be best for our investors? That's really what everything boils down to. And the more we're looking at, the more we understand about these different markets, the better, final opportunities that we have to then send on to our investors.
That's exactly right. Thank you, Brian. If you have any questions, we'll stick around for another minute. Other than that, all I have to say is go Badgers, and I'm not very confident about Marquette tomorrow. Thank you all for your time. We appreciate you spending some time with us, and have fun watching those games today. One other thing Peter just reminded me to mention, we are having a March Madness party at our office tomorrow. If you'd like to join, if you're in the area, we're located at 1134 North 9th Street. You can Google us, F Street. Yeah, we'd love if you could join us. We're going to have some drinks and watch some basketball. It's going to be a great time. Starting at 11.
It's an open house all day as long as there's games on. So, feel free to stop in for 5 minutes. Feel free to stop in for the whole day. We love having people here. So come on by and say hello.
Yep. Thank you very much.